They told you crypto was dangerous, like they warned it was just a fad. But behind closed doors, banks are quietly investing billions. While telling you to stay away, what are they hiding? From secret patents and shadow partnerships to programmable dollars that could control how you spend your money. This isn't just about digital coins anymore. It's about power, control, and who gets to hold the keys to your financial future. Welcome to the Mind Metrics. Here are 30 jaw-dropping crypto facts the banks really don't want you to know. Fact 1. Over 90% of the world's money exists only in digital form. Most people imagine money as coins and paper, but over 90% of the global money supply exists as digital data inside banking systems. That means your money is really just numbers in a bank's database controlled and altered by central institutions. With crypto, the digital money is still digital, but you own the private keys, not a bank. Fact 2. The US government is developing a programmable digital dollar. The Federal Reserve is testing a central bank digital currency, CBDC, that could replace physical cash. It promises speed and efficiency, but it's programmable, meaning the government could potentially limit where, when, or how you spend your money. Think stimulus funds with expiration dates or blocked purchases of unapproved goods. Fact 3. Big banks have quietly filed over 1,000 blockchain-related patents. Despite years of publicly dismissing crypto as risky or speculative, banks like JP Morgan Chase, Bank of America, and Goldman Sachs have been aggressively patenting blockchain technologies, likely to gain early control over the future of finance while publicly discouraging retail investors. Fact 4. Bitcoin is legal tender in El Salvador and the Central African Republic. In 2021, El Salvador shocked the world by adopting Bitcoin as an official currency, meaning it must be accepted by all businesses. The Central African Republic followed suit. These countries are using crypto as a hedge against inflation and a way to attract international investment and tourism. Fact 5. Banks are already using blockchain for cross-border transactions. SWIFT transfers are slow and costly, taking up to 5 days with high fees. Banks are now using Ripple's XRP ledger and other blockchain protocols to move money instantly and at a fraction of the cost. But they don't market this to the public because blockchain makes their bloated infrastructure obsolete. Fact 6. DeFi platforms processed over $1 trillion in transactions in just 1 year. DeFi, short for decentralized finance, allows users to lend, borrow, and trade assets with no banks involved. Protocols like Aave, Uniswap, and Compound use smart contracts, not humans, to execute financial services. No paperwork, no approval, no waiting. Fact 7. Bitcoin's first real-world transaction bought 2 pizzas, now worth over $600 million. In 2010, Laszlo Hanyecz paid 10,000 BTC for 2 Papa John's pizzas, now worth hundreds of millions. This event, celebrated annually as Bitcoin Pizza Day, shows how Bitcoin evolved from a hobbyist project to a multi-trillion-dollar financial revolution. Fact 8. Banks profit from your ignorance about crypto. They charge overdraft fees, savings interest below inflation, and transaction charges. Crypto threatens that model. The more complicated they make crypto sound, the less likely you are to use it, keeping you dependent on outdated systems. Fact 9. Crypto wallets can't be frozen without your consent. If you store your funds in a self-custodial wallet like a Ledger or MetaMask, you own the keys. No one, but not the bank, not the government, can access or freeze your funds without your private key. In contrast, a bank account can be frozen instantly based on suspicion or government orders. Fact 10. Bitcoin has a hard cap of 21 million coins, forever. Unlike fiat currencies, which can be printed endlessly, Bitcoin is programmed to never exceed 21 million coins. This scarcity makes it deflationary over time, much like digital gold. More than 19 million have already been mined, and the last Bitcoin will be mined around the year 2140. Fact 11. Ethereum powers more than just a currency. It's the backbone of Web 3. Ethereum enables smart contracts, NFTs, DAOs, and decentralized apps dApps. It's like an app store with no Apple, no gatekeeper, and no censorship. This technology can replace banks, lawyers, and even voting systems. Fact 12. institutional investors are quietly buying massive amounts of crypto. While retail investors are panicking during price dips, companies like MicroStrategy, Tesla, and Grayscale are buying the dip. BlackRock, the world's largest asset manager, has launched a Bitcoin trust. Big players are entering while telling the public to wait. Fact 13. Traditional bank transfers can take days. Crypto can settle in seconds. ACH and SWIFT wires are slow, often delayed over weekends or holidays. Blockchain networks like Solana, Avalanche, or Stellar can transfer assets worldwide in seconds, 24/7. No need to wait, no need to ask permission. Fact 14. Crypto is already helping the world's unbanked. More than 1.7 billion people globally lack access to a bank, but many own smartphones. With crypto, anyone can send, receive, and store value securely. Platforms like Cello and World Mobile are actively building financial infrastructure in remote areas using blockchain. Fact 15. Banks are secretly partnering with crypto exchanges. JP Morgan serves Coinbase and Gemini. Goldman Sachs offers crypto products to clients. Morgan Stanley has invested in Grayscale. While public messaging remains skeptical, the private deals say otherwise. Fact 16. Stablecoins offer high yields and stable value with no bank required. Stablecoins like USDC are pegged 1-to-1 to the US dollar. On DeFi platforms, you can earn 5 to 10% APY holding stablecoins, far more than the 0.01% most banks offer on savings accounts. It's like earning interest without the bank. Fact 17. Every crypto transaction is transparent and traceable. Unlike bank transfers that hide behind internal systems, blockchain transactions are public and immutable. Anyone can verify a transaction, track it back to the origin, and audit the network, bringing more transparency than traditional finance ever has. Fact 18. NFTs can store proof of ownership, contracts, and even medical records. They're not just about overpriced monkey pictures. NFTs can verify ownership of digital and physical assets, academic degrees, real estate titles, and more. Entire industries, from art to real estate, are being restructured through this tech. Fact 19. Crypto can protect you from inflation. While fiat currencies lose value over time due to central bank money printing, assets like Bitcoin have consistently outpaced inflation in the long term. In countries like Venezuela, Argentina, and Turkey, crypto is a lifeline against hyperinflation. Fact 20. Central bank digital currencies, CBDCs, are programmable and controllable. With a CBDC, governments could set spending limits, restrict purchases, or freeze funds instantly. Think of it as money with terms and conditions, unlike decentralized crypto, which operates on open, neutral networks. Fact 21. Some governments use blockchain while banning crypto. China banned crypto trading and mining, yet uses blockchain for internal logistics, public records, and its own digital yuan. They want the technology, just not the freedom it gives citizens. It's about control, not ethics. Fact 22. Some banks block customers from buying crypto with their own money. In some countries, customers report banks freezing accounts or rejecting crypto-related transactions entirely, even if they're legal. Meanwhile, those same banks are quietly building their own crypto desks behind closed doors. Fact 23. The IRS and other tax agencies are tracking blockchain wallets. Think crypto is invisible to tax authorities? Think again. Agencies now use blockchain analysis tools like Chainalysis to identify wallet holders, trace illicit activity, and audit crypto transactions. Privacy coins and mixers are now under increasing scrutiny. Fact 24. The world's largest Bitcoin mining country was once China. Now it's the US. China banned crypto mining in 2021, driving miners overseas. The US quickly became the new global mining hub, especially Texas and Wyoming, taking advantage of cheap power, open land, and friendly laws. Fact 25. Crypto can be sent across borders with no permission or middleman. Try sending $10,000 overseas via a bank, and you'll face limits, paperwork, and delays. With crypto, it's instant, borderless, and requires no approval. That's financial freedom, and banks know it. Fact 26. Lost your keys, you lose your crypto forever. Unlike banks, there's no forgot password with decentralized wallets. Lose your seed phrase and your crypto is gone permanently. While this sounds risky, it's also the purest form of ownership. No one else has access, not even the developers. Fact 27. Bitcoin mining uses energy, but so does banking. Critics slam Bitcoin's energy use, but ignore the massive carbon footprint of global banking. ATMs, servers, physical branches, armored cars. In fact, many Bitcoin miners now use renewable energy and excess hydroelectric power. Fact 28. Crypto has sparked the creation of digital nations and network states. Visionaries like Balaji Srinivasan are promoting the idea of online communities with shared values and decentralized governance, using crypto for funding, coordination, and identity. These network states could challenge physical nations in the future. Fact 29. Banks once said the internet was a fad, just like they said about Bitcoin. History repeats itself. In the 1990s, major banks mocked the internet. Today, they mock crypto, but the same institutions now depend on digital banking, e-commerce, and mobile apps. Will crypto follow the same path? It's already happening. Fact 30. The real revolution isn't just crypto, it's control shifting back to the people. Crypto isn't just a new asset class, it's a new system. It decentralizes trust, eliminates middlemen, and gives financial power back to individuals. That's the part banks fear most. The truth is out. Crypto isn't just money, yet it's a movement, a revolution, a chance to rewrite the rules of who holds the power. Banks had centuries of control, but for the first time in history, the balance is shifting to you. If these facts made you rethink everything you know about money, hit that like button. Subscribe to the Mind Metrics for more truth they don't teach in school, and ring that bell so you never miss what's next. Because knowledge isn't just power, it's freedom. Thanks for watching, and like always, stay curious.